Alrighty guys, what is going on? Welcome back to another episode. In today's video, I really want to talk about the top stocks under $20. So I hope you guys enjoy it. If you get anything in value, hit that like button and subscribe to the channel. If you guys have any questions, ask them down in the comments. And if you guys want to learn more about investing in the stock market, go ahead and check out my course. And you guys can use promo code DIVIDENDS to get 50% off. We talk about fundamental technical analysis, how to find undervalued stock. We talk about everything you need to know for investing in the market. I'll put a link to that down below. So now, let's roll the intro. Let's go. Bam. So now one thing before we talk about these stocks is I need you guys to understand that these stocks under $20 definitely carry a little more risk than traditional blue chip stocks, ETFs, bonds. So maybe make sure you guys have some of those blue chip stocks, bonds, or ETFs before you have more riskier investments like these ones under $20. Also, another cool thing you guys can do is instead of investing $20 into a riskier stock, you guys nowadays can invest $20 and get a partial share of a blue chip company. So it's all up to you though, but these are going to be the top stocks that definitely carry a little more risk, but also a lot of reward. Let's go. Alrighty guys, so the very first one here that I want to talk about is ZNGA, ZNGA here. This one's trading right now for about $10. It's sold off from around $12.50 all the way down to $10. Now, ZNGA is the company that is behind Words with Friends and a lot of other mobile apps. My personal opinion, I really believe that whole sector is going to grow and grow and grow and grow. The reason why is because people want to be entertained on their phones. I really believe the overall demand for that is increasing, and it's really proven that over the past year with very, very solid fundamentals, increasing revenue, high margins. The company makes a ton of money, and there's a lot of potential for it. Not to mention on the technical side, you guys can see it's been trading around these highs here. $12.50. It's sold off down to about $10. So it's like buying on a discount. Really, there's a ton of potential for this, and I highly recommend it here. But this one definitely still carries a little more risk because the company is still growing, but ZNGA is a perfect investment for the long term here. Now the next one here isn't under $20, but I really believe this one carries a ton of potential, and you could possibly pick it up under $20 or near $20 here. This is SunPower Corp. Now, SunPower Corp is a renewable energy company that's really proven very, very high growth here. But recently, we've had a nice, solid downward trend, but a long-term upward trend. So there's a very, very strong possibility in the near future we could be picking this up for about $25 to about $28 a share. And you could have picked it up for about $28 to $27 a share about a week ago here. But the overall growth for this right now is very high because of the overall demand for renewable and clean energy. And on top of that, when the stock was trading above it here, you guys can see it like to use this 200 moving average line as support. So every time it hits this yellow line, we get buying pressure. So buying pressure, buying pressure, buying pressure, comes in contact, breaks above it. So now that old support is acting as resistance. So instead of buying pressure, we get selling pressure. Hits it, sold off, hits it, sold off, sold off, sold off. So now I really believe we'll probably get some sort of sell-off back down to about $30 to about $28. So that's what I mean by around $20. It's a perfect investment here for the long term. And in my opinion, you're still buying on a discount because the stock was trading for $57 a share. It's sold off now. The demand's there for this one. Little risk, but overall ton of reward for the long term here. Now the next one here is PD here. Now, this one here is a perfect investment for the long term here. You guys can see you get paid 45 cents a share. Right now it is trading for about 23, but there is some resistance there. So probably get some sell off back down to near $22 to $21 a share. It does have a tendency to use that same moving average line as support. You guys can see it's hit it here, buying pressure, and now it's probably going to get a little bit of selling pressure because of that overall resistance here. But I really believe this is a perfect investment for the long term. You guys can start compounding your money with the dividends. There is still growth there, and I really believe this one carries a ton of potential here. Now, another one here is ARCC. Now, for my understanding, this company is working with a lot of blockchain technologies, and they are in the works with Bitcoin transactions, stuff like that. That's why we've seen a ton of growth over the past couple of weeks. And on top of that, you guys get paid 40 cents a share just for holding a stock that's $18.61. Yes, we did get a little bit of temporary sell-off here, but if you look very, very close, you guys can see this purple line here. This purple line overall acts as a 90-day moving average line. So it merges the past 90 days' closing prices together, very similar to the 200, but it's the 90s. Very similar thing. You guys can see it's hit it, and we get buying pressure there. So now with this selling off, I really believe this is going to be a perfect investment to hold for the long term here, and overall pretty much buying a discount, or you guys can use dollar cost averaging to get a good solid average price here. Now the last and final one here that I want to talk about is American Airlines. American Airlines is right around that $20 mark. There is a couple things that I really like about American Airlines, and then there's some things that I don't. But I overall believe there is still demand there and there's still growth there. The things that I don't like is over the past 3 years, you guys can see we've had a downward trend. Okay, the thing that I do like about it is before the overall recession, this was trading for about $30 a share. With it being 23, there's still a potential for it to come back up to that $30 mark. But it is on a downward trend. They did cut their dividends. The company does have quite a bit of long-term debt and not very, very high margins and high growth of revenue. But there is demand there, and I really believe this stock could make you guys some money. Understand, though, this one probably carries the most risk, but also a little bit of reward too. So it's kind of one of those that maybe be diversified before you go into this one, but there's still a lot of potential there. Just understand that this stock does have a downward trend, so the sellers are in control of this one. So I hope you guys enjoyed it. So that is it though. I hope you guys enjoyed the episode, and if you did, hit the like button and subscribe to the channel. If you guys have any questions or concerns, ask them down in the comments, and remember to stay happy, stay positive, and stay safe out there. Take care.